But I'd like to welcome the people who are in the Hi Investor webinar today and say hello, the Hi55 Investor webinar. 30 minutes of questions with the panelists and discussion with the panelists, and then over to the investor or the audience Q&A after that. Just a bit of an intro about Hi55, which I've composed, and I feel that it's hopefully strikes the right tone. In the financial markets, it can be said that timing is everything, especially when combined with a good idea, or even better, a new concept. With Hi55 Ventures, we have the combination of a new concept, the monetization of payroll, and timing with regard to the pandemic, which has cut a swathe through the economy and our lives as well. We've also got an entrepreneur with a vision to make this new concept work, David Brown, who's been in the financial industry for many decades, or decades at least. From an investor perspective, there is a chance of a ground floor opportunity in a fintech company which should go straight into the stock market as a mid-cap, or it would if it was valued as that kind of company. And also it is a company which should become a mainstream entity as well. Perhaps the best part of what Hi55 could become, what's known as a soonicorn, as in the language these days, is by definition, if you control payroll, you're at the top of the pyramid as far as financial services are concerned. This should mean that Hi55 leapfrogs the position of challenger banks and organizations such as Revolut and other myriad new financial contenders. We'll see what happens there. Hi55 has the idea, it has the tech, has the scalability, and most of all, there's a critical need for its services as we come out of the pandemic, and corporates need to jumpstart their recovery. I think it's even more in focus today as we've got the second new vaccine, apparently a vaccine that works better than Pfizer's from Moderna, so 95% this week, 90% last week. We'll see if somebody can do better next Monday, but very interesting times, but I think it does underline that we are looking at hopefully the end of the pandemic in terms of the economy, in terms of furlough, and the start of maybe as great a problem or an issue, which is to revive corporates and revive our financial situation. So hopefully I can start off and say hello to the panel. David Brown, who is the founder of Hi55, Elizabeth Greer, who is investor relations at Hi55, Phil Woolas, who is a politico. I don't think I can go into much more detail than that, but he's been around the block a few times. I love politics. I'll be delighted to hear what he has to say. And the man who's the, I suppose, the techie and the engineer behind the fintech platform, John Hawkins. How are you today, John?
Hi.
And so I think we'll just start with a few questions that maybe the main one is to David Brown. Why has no one thought of the high payroll solution before?
It's a good question, Zach. I think it's because of basically my background. My background is in trade finance, and I started to ask the question, why do we not finance people? So that caused the team at Hi and I to go and sort of take a look under the covers at why people traditionally have never been financed in the world of trade finance. We kind of came to the conclusion that payroll, the way payroll's currently constructed, didn't really help either the employer or the employee. It imprisoned both of them. It imprisons the employer because they have to find working capital to fund payroll, and also imprisons the employee because they need to wait till payday to get paid. We kind of thought about it as a financial application and thought, wouldn't it be better if the employer could just pay payroll at a time of their choosing and allow the employees to determine how they want to be paid and have it financed? And that's really why it's, for the first time ever, it's been created as a new asset class, which is what we call pay asset finance.
Is it correct to say that you've actually, in a way, reinvented the wheel, or reinvented a part of the financial wheel?
Yeah, what we've not done is we've not reinvented trade finance. Trade finance is a multi-trillion-dollar business that's very efficient in terms of its capital funding. But what we've actually done is we've brought trade finance, a new category called payroll, to finance.
Okay, all right, that seems pretty pretty succinct. More general question, I think, is saving companies or jobs merely creating a zombie economy? We had that with the global financial crisis in 2008. Got lots of zombie banks around the place, still losing money, I think, the last time I looked. Who would like to answer that particular poison chalice question?
I'll take that one. I mean, for those of you that read the Daily Mail, which is the Bible in terms of all things truthful, the Daily Mail will have told you that actually what we have done through furlough is we have actually changed the insolvency landscape of the UK. So actually fewer companies are going insolvent in the UK because they're being propped up by state aid. So, you know, if we're going to look at a weapon that you shouldn't use in order to create zombie companies, I think furlough's proven that it shouldn't have been used that way. Yeah, so I don't, whereas finance and payroll is a different issue because that's something that the employer elects to do. And to be honest, if he gets to the end of the cycle and doesn't refinance his flay, he is insolvent. So we wouldn't change that landscape.
So there are two scenarios. An employer would use the Hi55 platform. They say the first year they come back in, you know, say we're all back to normal in January or March or whatever it is. He uses it for 3 months or 6 months to get back off the ground, and once the money, the revenue start coming in for his business, he doesn't need to use it anymore and says thank you very much and goodbye.
Well, not really. It's not as simple as that. It says he takes the credit, yeah, and refinances the credit through paying people. So does he say goodbye? Well, that's his choice. If he wants to keep the credit in place, he can. If he wants to refinance the credit out, he can. And I think it's important, Zach, but for people to recognise that the greatest risk of insolvency in any business is growth. And actually recovery and growth are exactly the same words, because what it means is as you're trying to get your revenues in, if your costs accumulate too quickly, you will go insolvent. So our fear, and what we are working with the UK government on, is if you do not give these companies financial assistance to recover, they will go insolvent because the costs will be there and the revenues won't.
But so you corrected me in the sense that, you know, I said that, you know, let's say this is, so Hi55's platform is not just a temporary one to get you back off the ground or back in the swing of things. It's actually once you've got it, you would never really think of leaving it because it's just much more efficient much more efficient than anything which was there before.
Yeah, I mean, so we get. It's really, let me help you with part of your question, is because we get this from people. Are we just a pandemic system? You know, is this just a COVID-19 gig? And the answer is no. This is a working capital gig, and working capital is something that survives pandemics. In fact, the only thing COVID-19 has done to the UK and global economy is proven that you didn't have enough working capital, because that's why you're all going bust. So working capital is about ensuring that you have enough cash in your business to survive a pandemic, a slowdown in sales, a recession. So as a result of that, we have a forever business because we generate working capital from payroll.
Right. So let's say before, if you relate it to a normal person who was just living on a credit card, just paying them £5 minimum or whatever they were going to pay. Here, you're giving companies the opportunity not to be, you know, sailing around with just 1 month or 2 month payroll. They have visibility on their cash flow and the amount of capital, the working capital they have, and they can just keep on trucking and not be sailing so close to the wind should the pandemic return or there's a recession or there's something else like that.
That's it, you know, like I think we've learned from the pandemic that the two things that people should have learned was save your money and pay your taxes.
Right. I'm going to just go on to a different issue, because I have been watching, and I think we've been watching in the papers and reading in the papers, Hi's sort of liaison with the government, and you mentioned that a minute or two ago. Phil, one of the I'm sort of thinking myself really. the government's a very proud institution, very proud people in it. Not quite sure whether we can be proud of them, but they're very proud of themselves. How easy is it for the government, or would it be for the government, to avail of Hi55's services?
Well, thanks ever so much, Zach, and good afternoon, everyone. I've been fascinated by this journey. I was a Treasury Minister in the 2008-2010 period when we faced the financial crisis, and I wish we would have had this source of working capital then. The scheme, as David has said, works without government and didn't need a crisis. It provides a new form of working capital to help companies grow. But the government have, of course, engaged with us because of its potential for a really a post-furlough recovery period. We have got some technical issues that we're engaged with BIS, the Department for Business, Energy, Industry, and also with the Treasury. Where we really need to move forward as a country and as a government is to make sure that we can help the millions of small businesses. But as it stands, David and the team had planned Hi55 before the recovery based on the existing law. One of the things we're talking to the ministers about, and indeed the Chancellor himself, are the significant advantages, not just to the economy that are there, which are briefly, people can get paid when they want to get paid on a weekly basis or indeed as they earn, and the job protection, the money that's already been put into Hi55 can protect 1.2 million jobs for an 8-week period. But from the Exchequer's point of view, Zach, the scheme has many advantages over furlough. It protects the tax revenue. It protects further erosion into the public sector borrowing requirement, and thereby protects the debt and protects the deficit. It protects the National Insurance Fund. And of course, it means that redundancy and insolvency is avoided, which saves billions on the welfare benefits budget. So people say to me, this is a win-win for the government, and the answer is yes, it is. As I say, Zach, I wish we'd have had it in 2009.
But it just seems that the government, so it's just really a matter of time. The government, let's say the pandemic ends, but the government will presumably down the line merge the Hi55 offering into what it's currently doing. Is that a fair thing to say?
I think what will happen, Zach, is that Hi55 will break new ground whatever the government does, because the product is there, the legal basis for it is there, and the companies, the demand for it is there as well. I think as we see it rolling out, government will see the advantages for widening the scheme, for making it more accessible in terms of the sovereign guarantee that the Employment Rights Act gives, in terms of the weeks of arrears that it covers. There is no downside from the Exchequer's point of view. Obviously, the amount of money that's covered by the sovereign rate is capped at 538 a week. It doesn't mean you can't use Hi55 above that. I think also, just final point on that, to answer that question, Zach, I think it because it creates a new source of working capital, it will transform the markets, and possibly in the future other people will come in a similar space. So I think it's very strong.
And so, I mean, so it's something which is probably just a matter of time before either in the public or, I mean, obviously you're working on the private area anyway, but the public sector probably needs it more. Is that something you're saying?
No, I don't think the public sector needs it more. The public sector can use it, certainly, particularly local governments that are stretched. It's also one of the things that we're doing is configuring it so that there is a revenue stream for the Exchequer through the repayment scheme. So we're trying to put an incentive in there as well. But it applies equally as at public and private sector. I think the main market, in my view, the main advantage is for businesses that are trying to recover after the pandemic, and in the long term, businesses that are growing and need that working capital.
Right, I just want to get slightly more investorish-y, if that's the right word. It probably isn't. And maybe just start off with David again. You're currently a private company. What's your preference, private or public? How do you see Hi going forward?
So at this point, I'll hand over to Elizabeth because she runs the investor relations and generally is dealing with the market.
Yep, sure. So, again, we are a private company right now. We have quite ambitious growth plans. And so with that, in our current fundraising round, we are looking to raise £5 million. And we are lucky enough that we have up to £2.5 million reserved from a very large credit asset manager that we are hopefully going to be partnering with. We just received a significant £5 billion initial commitment from them to fund the payroll of SMEs across the UK and Europe. And again, that's significant for so many reasons. Just quickly, that totals to about £140 million in annual revenue for Hi55 once operations are up and running and £5 billion are going through the platform. We think that this is an initial minimal commitment from them. It could be double, if not more than that. And then just as importantly, significantly, is that this would enable us to help SMEs who so sorely need that working capital and oftentimes do not have the same access to financing options that some of their larger counterparts have, such as in the public markets and so forth. And we know that SMEs are the lifeblood of the economies around the world. Now, going back to the near term, you're talking about public or private. So yeah, we are considering two different options. We are looking to IPO next year. Again, we are currently looking at Q3 2021. However, we are also considering a reverse IPO opportunity, which would expedite our route to the public market. And again, we feel that the timing is right and makes sense, and it would enable us to expedite our growth and expansion plans, because our solution is not just UK focused, it is global.
Right. So, I mean, that was another question that's come in. I mean, what are your plans to penetrate or expand in mainland Europe? Is it a read across from the UK to Europe? Is it easier, more difficult?
Well, we're very excited about the opportunity in Europe. Again, as we all know, many of our businesses in the UK have operations in Europe as well. So if we're looking at payroll of employees, then it makes sense to be able to fund the payroll of not just our UK employees, but also European. And thankfully, the legislation that we are using and looking at is very similar to what we are working off of in the UK. So that significantly helps us. And so we're very excited about the opportunity in Europe.
Right. I mean, the other question at the moment is you're going to have a valuation jump from 28.5 to 70 pence a share. Clearly, for the people who are already in the situation, Christmas has come early. What was the incentive for that re-rate?
Well, again, I touched upon it very briefly. Again, we've had significant developments recently, but the most important development, is the term sheet that we received from this over $60 billion AUM credit asset manager that we have received. We are looking to have the term sheet executed by or before the end of this month. Again, that's for minimal initial commitment of £5 billion. We think it could be double or triple that amount. So that would enable us to really make our mark across SMEs and also potentially, enable us to help fund the payroll of some of our large corporates that are struggling with their working capital as well. So that is first and foremost one significant development, but also we have made a lot of progress in terms of building our platform with our NTT tech data provider, and they are significant. They are global in nature, and we are working very closely with them, not just on the development of our platform, but also in terms of the distribution side. So they have significant number of Fortune 1000 clients that they are happy to introduce us to. And we are, thanks to their introduction, we are speaking to a very large, well-known global corporate with 160,000 employees. And hopefully by next week, we will have the confirmation that we will be piloting with them. So that's just, one other development. And then also we are making progress on our conversations with the government, UK government, as well as local authorities. And last but certainly not least, we are building significantly on our partnerships. So we have a number of discussions and progress with our payroll provider partners, such as Sage and Xero. So we are in significant advanced stages with them on integration, and they have 8.35 million employees that they do payroll for. So that would be significant. That's just in the UK alone.
Right. I mean, I gave you my back of an envelope unicorn label, which to my mind means a market cap of several hundred million, just because of the company you're keeping and the people you're talking to. Is there any idea from your point of view? You're obviously inside the situation there. What Hi55 could be valued at, or maybe should be valued at?
Oh gosh, well. I guess I'm obviously, I'm part of the Hi55 team. I'm extremely excited about the opportunity and just, for the investors, potential investors who are attending the webinar right now, it is very exciting because even just the UK alone is a significant market for us. If you're thinking about payroll, that's normally the single largest cost of a business. And if you're looking at that around the world, then it's a huge opportunity. So it's really like $85 trillion opportunity. So if you're just looking at the UK and Europe, the upside is significant. So yes, I think it could very easily be valued at $1 billion plus.
All right. I like Sunicorn, so I'm sticking to that.
No, I like Sunicorn too.
Right. Right. A question for John, if I can bring John in at this stage. It seems to me that the monetization of payroll concept is a new one, or it's pretty unique, let's say. Does this mean that you've had to create a technology or engineer a technology which is unique as well? And is it complex? Is it complicated? How's that particular aspect been? And is there a value in that platform, in that fintech technology?
I think there is. I mean, I think what we're doing is not particularly new. It's we're bringing the previous rules of trade finance to this market. So we're taking technologies that have that are well established, but we are applying them to a completely different domain here. So the domain of payroll. Now that in itself is not overly complex, but it is large. So this is a landscape that there are any number of variations that can go through. So I think what is valuable in what we do is bringing the expertise firstly bringing the expertise to define our entry points into this market, where we can actually identify these irrevocable commitments to pay that allow trade finance to be applied. And then secondly, the scale. And this is what we get through our partnership with the NTT Data company that's is both a giant in terms of IT services and consultancy, but a giant with global reach. So what we have with within Hi itself is a well experienced trade finance team that can apply the smarts, and a technology team that can run at the speed that you would expect from a from a startup. But couple that with the trust, with the might of a giant like NTT, and the reach of a company like NTT, and this now becomes a solvable problem.
And presumably NTT have looked at your tech and said, they're giving you the thumbs up as well. I mean, that's a big validation, isn't it?
Yeah, I mean, look, the way that we work with NTT is a collaborative group. So I have my development team internal to Hi. I also have a development team internal with NTT. So we work as one team, basically. Our delivery route is through NTT, so this is what gives us the surety to be able to go to giant companies and governments, etc., and with a straight face say, you know, you can trust us to finance your payroll. They are the team that you know, when you're doing your due diligence, when you're looking at who you're working with, who you're passing your data to, they are the company that pass all of the checks in terms of the security, the resilience, the credit worthiness of the company you're dealing with, and we're able to feed our knowledge, our expertise, and our flexibility in through that route to make sure that it gets to market as quickly as possible.
Right. Okay. Well, I've got some questions coming in, which is sort of the more the straight talking ones. Probably the most notable here is, how can private investors invest in Hi55? I presume Rich would like to come in on that one.
Yeah, sure. We've been working with David and Elizabeth and the team for a number of months now, and we hope this is probably the last private raise before the IPO. Elizabeth has alluded to the fact that they're looking at the latest third quarter next year. It may happen earlier if the other discussions happen. So the invites that went out were jointly sent from Hi55 and NR Private Market. That is the route. We'll follow up with all the people who participated in the call after anyway, but people need to accreditate themselves via the NR Private Market platform. It's a very simple process. A number of current investors are on the call as well, and you'll be invited to take part. You go through the KYC and the AML, anti-money laundering checks, and then it's a question of signing up. I think if Elizabeth wants to comment on what sort of minimum ticket sizes, etc., and how that process has gone, but as she said, we're already 2.5 million through the 5 million, and the reason for the uplift in the share price is obviously the 5 billion term sheet that they've received, and they're working through that as well. So it's all very exciting.
Okay, Elizabeth, you want to answer that, or follow on from that?
Well, sure. Well, again, I'm very happy to, answer any questions. I believe we're going to be breaking soon for a Q&A, but if anyone has any specific questions on investing that Rich wasn't able to answer, then I'm happy to answer them. Again, it's Elizabeth with a Z at hi55.uk.
Yeah, just a final maybe one for just this section, back to David, if he could answer this one. I think that we didn't cover it that much in what we've said. We've covered, I think, almost everything, but just in terms of, you've got this, brand new shiny offering, fintech, Marvel, Unicorn, etc. Is there a chance that someone else might turn up and say, thank you very much, I'm going to try and copy that?
Well, to be honest, Zach, that's what you want, to be honest. Replication normally means that you've got a market that people want to enter. So a competitor would be good. It also will make sure that Elizabeth sharpens her pencils. And the team sort of start to look behind them rather than right now they're looking in front of them. So the reality is, by getting this right, you will have a competitor. But you also have a first mover advantage, and it's about how you use that. And if you use that correctly, then you actually make competition not impossible, but just a little bit more difficult. So an example would be, most of the payroll companies are working with Hi right now to get live and get their users live. That's a barrier to entry. NTT globally, with data centers in every major country in the world, that's a barrier to entry. Trade finance banks that are engaged with Hi to look at funding, that's a barrier to entry. £5 billion of cash is a big barrier to entry. So if you build yourself right, you should get your first mover, which is good for our investors and ourselves, but you will get a competitor.
Yeah.
Right. Okay. And just the final question, maybe in this section, which maybe should supposed to be in the other section, but will £5 million be enough at this stage for Hi? Would you take on debt rather than issue additional equity? What's the math that you're doing there?
I mean, so as Elizabeth alluded to, Upon the execution of the term sheet, if we take this initial £5 billion, and remember, as Elizabeth said, there's more on offer, that's just the first tranche. And we take that to the UK market, which sounds like a lot of money, but actually it's not. Phil's talking to a local authority and need £3.5 billion just for their area. Then the revenues just from that are 140 million. So you can work out the maths. If we put 10 billion out there, 20 billion. So what you have is a very cash generative business. So the answer is, I don't think we will raise any more equity.
So you're not raising more equity because you don't actually need any more equity.
I don't think you need it, because I think as you execute the cash that's on offer, it's fairly cash generative. We've got a per user model for the employers, and that's every month. We've got a liquidity fee from the funding providers, which is every time it's drawn. So you'll find yourself generating cash fairly rapidly, Zach. And right now, as Elizabeth alluded to and Phil did, our current business is highly credit-worthy customers. We're in discussions with 3 employers that have over 700,000 employees. I mean, so the scale of this is significant. We can sign 10 deals and have 1.5, 2 million employees being paid through Hi.
So you've invented let's say a new railroad, and you're there with your locomotive, and you're just ready to go.
Absolutely, in fact, we're more than ready to go. We are proud to tell you that NTT themselves will be paying their employees through Hi by the end of November, because they've already adopted the system, and that's a 300,000 employee company.
Right, and to correct what I was angling from at the beginning, this is not a pandemic situation. This is a new, let's say, a new fintech, a new technology, and it's something that everybody will be using. It's like switching from dial-up to broadband or something like that. It's just something that everybody will be using in terms of payroll, in terms of employers, etc. I mean, it just, why pay 10x when you can pay 1x per month in terms of your outgoings?
Yeah, I mean, to sort of maybe help the base here understand. So traditionally, the way a large corporate, which is the market that we are currently prevalent in, would generate working capital is they'd move supplier payment terms to 90 days. The reason they would do that is because that would generate significant working capital on the balance sheet, but wouldn't change the classification of the trade creditor. So i.e. it's not debt. Yeah. That was the premise of which we came to Hi, saying, well, hang on a minute, if you can put your suppliers on 90 days, why wouldn't you put your employees on 90 days? And it's quite interesting, because I've actually had people saying, well, our employees are special. And I'm like, well, so are your suppliers, because if they don't supply you, you're closed. So it's just a change of people's mindsets. But saying, but so what if you pay your employees in 90 days? As long as they can get paid daily, weekly, or monthly, why do they care? They can have better terms and you can defer. That's the working capital, Zach, that actually runs the world today before a pandemic. It will carry on afterwards. It's how people manage their working capital.
And so let's say, I'm sure you remember as well, I mean, the housing market was changed by mass mortgages in the late 70s, early 80s. Once that started, it never went back to people buying a house with cash. It's just a different thing. And also, now you have credit cards. You don't want to go and go around with a bunch of £50 notes or £20 notes paying people. I mean, it's just a new way. It's a new way of doing things, and it will be that'll be the norm in the next few years.
But I'm glad you brought the mortgage up. So here's something that we're working on. We believe if you could pay your mortgage weekly, it will take a minimum of 10% off your mortgage. Now imagine that. Imagine if we're actually right that by paying your mortgage every week, you can get 10% discount on the mortgage.
Yeah. That's
changing your mind, right? And we're working with a major building society right now who are taking this really seriously about offering a weekly mortgage, because there's no weekly mortgage today. But in America, they have bi-weekly mortgages, and it has proven to actually shave down the life of a mortgage.
Zak, it's Phil here. It's also worth saying that the evidence and practice is that an employee's ability to take their pay weekly rather than monthly is extremely popular. the move from weekly pay to monthly pay was resisted by employees quite strenuously when it happened. And the evidence, very interestingly, shows that the demand for weekly pay is as strong in the higher salary brackets as it is in the lower brackets, which is interesting because, of course, it facilitates people's ability to manage their budgets. So we know from the research and the work that's been done that there is a strong demand from employees. And I think also, and it relates to your question, Zach, about competition, we are not a salary advance company. We don't pay wages in advance. We pay people what they've already earned. And so the salary advance, the downside of the salary advance companies, it doesn't exist in the Hi55 model.
Okay, so it all sounds like good news. Cheaper mortgage, getting paid every week, maybe paid every day, hopefully in the future. That would be nice too. But the technology is all there, I presume. Just going back to the, so that, I think we probably covered all the bits that we could have, even that mortgage aspect, the weekly pay aspect, and then the reason for the valuation uplift. And so this for investors coming in now, are they still at the ground floor? Does anybody want to answer that? Maybe Rich, is like still an early stage investment?
Yeah, I think so. If you listen to the valuations that could be out there, if you multiply up the 5 billion term sheet, you get a few repeats of that term sheet and the associated 140, 150 million pound revenue per term sheet. You can quite quickly do your maths on your fintech multiple on multiples of revenue and what such a company can be valued at. So, the current round is 70p. Okay, it's not the first round, it's not ground floor, but it certainly seems to provide very good value.
But so there's like it's like early enough to have the upside, or plenty of upside, obviously, but also to have ironed out any of the to get the visibility and what the concept's going to be over the next, say, 3 months or in 2021.
Yeah, I mean, we can't recommend a stock on the platform. That's for people to make their own analysis. But it's in a mining parlance, it's not pure exploration. These guys are now developing their project. They're about to dig the hole. I'm a geologist, so that's why I relate to that. So a lot of it's been de-risked already to a certain extent, but there's still a hell of a lot of upside, I think, in it. But that's my personal view.
Right, I'm just going on to, we're going to go to Elizabeth. What's the reaction that, I mean, you're speaking to people, the investor relation person by definition, you've got your sort of ear to the ground in this way. What's the feedback that you're getting from people?
Well, I mean, just the fact that this has never been done before. So, it's a global first. And to, the fact that we've created a new asset class in supply chain finance called pay asset finance, and just the concept of the new idea of creating an entirely new stream of working capital by utilizing payroll. And it really is earth shattering. And at the same time, to not just, give a huge benefit for businesses, but just as much to give a benefit for employees of more frequent pay is just absolutely fantastic. And so there really isn't anything like that out there in the world, which of course I love saying many times. But then, in addition, I would say even funders that, I think, a lot of banks are really going to be closed for business next year. And if you're looking at their balance sheet and the types of loans that they've been giving out, they're not really performing well, nor will they. And there's a Citi UK report that came out recently highlighting that. But, funders will be absolutely more than happy to go and fund, our payroll working capital solution, pay asset finance. I mean, it's the asset class in and of itself sits higher than those of trade creditors. So it's, preferred creditor status, employees' wages, and that's what you see in the UK and Europe. And I'm, pleased to say, even in the US, there is a bit of a preferred status as well. So it's very exciting.
I mean, that you touched on a point there. I mean, are there any jurisdictional challenges in going global from a regulatory side? Because the regulations were regulated to death these days.
Yeah, so where we are there, Zach, is obviously we've worked very closely here in the UK with Slaughter and May to generate our legal and regulatory framework. And what we've done is, and that's part of this raise that we're doing, is we have Clifford Chance now who have European coverage. And what they'll do is they'll look at each of the geographies, insolvency, regulatory and employment. And that will determine how we start to roll out into the European countries. Yeah.
Right. So it's up to it's basically they're the scouts in terms of the legal side, the regulatory side.
It's basically taking what we've developed and making it fit for purpose for each of the geographies and which one's easier. So like an idea would be France, the employee comes above everybody else in France. So France is probably going to be high in the agenda to go first.
Right. And is that sort of the legal side, the regulatory side clearance? Is that going to be ongoing, or do you think that that'll be basically finished by the middle of next year or the end of next year, or is that just that they keep changing the goalposts, so you got to keep on responding?
Well, no, I think we'll be done a little bit quicker than that. I think we'll, in terms of a regulatory framework for Europe, I think we'll be done this side of the year on that. And remember that this is a business to business trade transaction, which is fairly less regulated than business to consumer. Yeah, so you've got a little bit less restriction when you do B2B.
Right. And I take it Brexit doesn't make any difference either. Not that it looks like there's going to be one, but
no, it shouldn't do. Imagine there's a spectrum where you have high degrees of insolvency, employee protection, and where you have, as David says, the case in France where the employee as a creditor is at the top of the list. But of course, it doesn't need that employment protection to provide for the service. It just affects the creditworthiness. You basically need a payroll system. So it works on all levels. Brexit might, in the future, change some of the smaller regulations, but it won't affect the fundamentals because that law was there as a UK law, not as a European Union law.
okay. Well, I think I've covered most of the questions that we've had here. I'm going to go round and round in circles. Just in terms of the time frames now, or the timelines, what are we looking for over the next 2 or 3 months, David?
So first up, just close this round out. I'm fairly confident that we'll get this wrapped up this month. It's looking good. We've got some fairly strong activity around the high investment, which is nice. Move it into execution, which means the first client going live is NTT. For those of you that are interested, the second client going live is Hi, but we're obviously a little bit smaller. But we're paying our people weekly, and John has set that up in Xero. So Xero's got 2 million businesses. NTT are on Sage, which has, 63% of SMEs in the UK use Sage for payroll. So get them live, get the term sheet executed and start to get the 5 billion into the market. That's kind of the challenges for the team in 2020. Build up that pipeline. Our initial engagement with the FTSE 100 has been amazing. We've just taken the product to them this month, and we're getting a high degree of traction very quickly, which is a good sign. And move that into 21, and then you start to look at the European expansion. Elizabeth is probably going to go to the US and start scouting the US market because she's a homegrown child of the US, and just start to build that out. We've got the folks over in NTT Japan who are talking to us about Hi Asia and franchising Hi Asia and setting up a unit out there. They're working with 2 of the largest financial institutions in Japan. So slowly build out that international growth, Zach, as well as we come through into 21.
So does that, I mean, obviously the technology, I presume, from John's side is scalable, so you could just keep adding on new corporates to the platform. But in terms of people power, I mean, if you started getting inundated with companies or the government, would you be able to cope?
Exactly. Yeah. I mean, this is why with the backing of NTT, who are both the services company and an operations company as well, we have that capacity on demand to be able to ramp up as needed. So if we have, our goal is to make this as friction free as possible. So low touch, low maintenance. Where that's not possible, NTT give us the resources that allow us to cope with that on a short to medium term basis. And they also give us the international reach and the expertise that we'll need to go into those markets and tailor the offering to be specific and applicable to those regions.
Okay, well, I think we'll wrap up just after I've got a comedy question at the end for Phil. When's Dishy Rishi going to say, yes, hi, come on down, we need you, we love you, etc., and embrace you?
So the Hi55 scheme is, as we've said, is not a crisis scheme. It's a post-crisis, it's a recovery scheme. So he will, along with his biz ministers, be looking at this for the third, what I describe as the third stage, as the post-recovery stage. So depends slightly on when the vaccine roll out, but possibly just before Christmas, but more likely in the new year.
Okay, and finally with Rich, anyone who's interested, they go over to Minexia?
Yep, the platform is www.nrprivatemarket.com, and all of the high profile is on there. There are other interviews from David and Elizabeth and myself, including you, Zach, which people can read and watch, etc. And there's much more information there. And the team are available for questions and answers post this. We'll follow up with emails as well and help people get signed up if they need to.
Okay, well, that sounds very healthy. I hope it's healthy for the economy in general as well. I'm not entirely impressed with the way the government's performed so far, but obviously they know what they're doing, and they couldn't have done any better given the very difficult conditions that they've been in. But Hi sounds like hopefully a shot in the arm for companies going forward into 2021. Thank you to David, Elizabeth, Phil, John, and Rich.